Hi, welcome to this week's weekly market update with Morton Brown Family Wealth. I'm Katie Brown and I have Cody Demmel here with me. Hi, Cody.
Hey, Katie, how are you?
Good. So this is the week of February 1st. We've made it through the first month of the year, and we have a couple of things that we want to touch base on. The last couple of commentaries that we've had, we've talked a little bit about some of those alternative pockets. And today we just want to touch on the pros and cons of receiving financial advice via social media. And then that leads us into our conversation on diversification. It has been an interesting month, and so we want to touch on diversification and some of the trends that we're seeing there, both in the near term, but also as we look over longer periods of time. Finally, we want to bring the conversation over to a proposed increase in the minimum wage and what that may mean for both Americans and companies. So, Cody, why don't you kick us off here? We're kind of paying attention to a lot of the news lines when it comes to social media and receiving financial advice there. What are some things that you're seeing and hearing?
So I think it's interesting that a lot of the trends that we've been seeing, the impact that social media has had in the finance world, both pushing individual stocks on Reddit. TikTok has been doing a lot of interesting videos on just financial advice in general. I think it's good to bring up the interest to some younger investors, but obviously we need to be careful on some of the advice that's being given.
It is interesting because as professionals, we are held to a standard which we embrace, where we always put our clients' best interest first. And so we want to think through the complexities and the intricacies of this piece of advice over here, and how does that fit into this piece of advice over there. So if we're looking at your long-term plan and you have, goals out on the horizon, we want to make sure that we're helping to position you appropriately. Whereas these little snippets that can pop up via TikTok video or other places oftentimes are just people sharing their singular experience without the professional backing to know how those pieces fit together. And by the way, sometimes they're talking too soon and they don't see how that actually plays out over time. And so whether it's, a stock recommendation or a tax recommendation saying, here's how you can avoid taxes, that might not actually be a way to avoid taxes. I was looking at a highlight of a TikTok video the other day that said, if you open up an S Corp account, then you can avoid taxes. You don't have to pay taxes. That's not really how that works. You can't write everything off. And so just need to be really, really careful that you don't have to have the expertise or credentials to post what you think may work for everybody. And yet those people are getting millions and millions of viewers, and it can create a pretty scary situation.
Yep.
I think the plus side, though, is that it is creating interest, and there's the desire to learn and the desire to figure out, what that financial path looks like.
Yeah. Well, just one of the videos I've seen it multiple times. They pull up filings from the SEC website and they say, this individual bought this stock. That means you got to buy it. And it's going up, blah, blah, blah. That filing could be 45 days old. Everyone knows the volatility that we have in 45 days. They could be out of that stock already, or it could have been down 20% when they got in. Just some of the information they have, that it could be dangerous if you follow it to a T. But I think, like you said, the conversations around finance, that's good for the younger population.
Yeah, you're exactly right. There are certain regulatory filings. So a firm like ours, if we are trading on a discretionary basis $100 million or more of stocks and ETFs, then we have to do what's called a 13F filing. So you can look and see some of the largest firms out there, what they're trading, buying and selling. But that filing is only done quarterly. And then you have 45 days after the quarter to file it. So to your point, how much have we seen happen in a 45-day period? So there is definitely risk in copycatting. And there's also, you don't have the whole backstory for why those transactions are taking place. And without that knowledge of what the strategy is and who the end customers and clients are, it's dangerous. I think one of the saddest parts too is that there's the potential for somebody to be really burned on a bad piece of advice and then say, that's it, I'm never investing again. I'm out of this. And I think that's a really unfortunate outcome that could happen. And I expect it probably will happen for a number of people. So, all right, on the other side of that, let's talk diversification for a minute. How do we do, first of all, in January?
Yeah, so January was kind of a continuation of what we spoke about the last quarter of 2020. Small caps and emerging markets did really well. They were both up around 7% year to date, and US large cap and large international was even or down a little bit to start the year. So again, it's a continuation of what we were looking at the end of 2020.
Yeah, we are seeing some of those trends that we've been talking about continuing a bit. And also, I know we brought this up a number of times before, but just looking at PE ratios and forward-looking ones and what that may be telling us about where things could potentially be headed going forward.
This is a chart that is going over the forward 12 months PE ratio. So it is baking in some growth over the next 12 months. So the yellow line is the US. So we can see it's pretty extended. One thing we wanted to point out, it is not as high as it was in 1999. And in 1999, I mean, you see how fast that growth up was over the past couple of years. If obviously this dropped down in 2020 was because of the coronavirus, but besides that, it was a pretty steady growth going up. It wasn't just straight up. And then again, one thing we wanted to point out is this is forward looking over the last 12 months. So we could beat earnings and this would actually be a lower number. Or as we talked about before, the risk of such high valuations, if the companies don't get to the earnings expectations the analysts have on the stocks, we could see a little bit of a sell-off just being at the extreme valuation. So this is why, as always, we think diversification is important, both in fixed income and stocks, and then throughout the world too. The green is emerging markets, and then the blue is Europe.
I think what's interesting too is that we're starting to see that spread between the different areas of the markets again. And we've talked about before that, we can be in market cycles for a decade or more. We don't know what's going to happen in the future, in the near term, in the long term, but we know that if the US is going to continue to perform the way it is, that those companies really have to have the earnings to back it. Otherwise, we're getting into kind of frothier levels here. So making sure that we continue to have that exposure in other areas of the world as well just helps to narrow our band of volatility going forward and make sure that we can participate. So when we have a month like January where emerging markets were up 3% and the US markets were down 1%, we're picking up a piece of that.
Yeah.
All right. So finally, just want to touch on this really briefly. The minimum wage. So the minimum wage for workers in the US has not changed since 2009. It's still technically at the federal level, $7.25. There's been a lot of conversation, I think, for a while about increasing that minimum wage amount. Biden has come out and he's proposed increasing that up to $15 per hour. And it's interesting because it hasn't changed since 2009 at the federal level, but over that time we've seen states and even companies coming in and making their own, rules, setting their own wage higher than that. So we have these like pockets of discrepancy kind of all over it, as far as, what the payment actually is. But at $15 per hour, that's higher than what we're seeing at any state level. I think some of the highest states are about $13.50, which is a great minimum wage compared to, $7.25. Cody, what are some of the pros and cons of increasing that wage?
So obviously some of the pros are the people who are making minimum wage could potentially double their wages. So that would be great. And then some of the cons would just be, unfortunately, the businesses that are probably paying the minimum wage have been hit the hardest from the pandemic. So obviously we have to see how that would affect them. And I'm sure they're looking at the consequences when they're going through the different proposals.
Yeah, I think 37% of companies that are paying out closest to the minimum wage are in industries like service and entertainment and hotel hospitality. A lot of those industries which have been impacted the most from the pandemic and probably still have a pretty long road ahead of them in this pandemic. Now, if there's an increase to the minimum wage, that might significantly inhibit their ability to weather through this. So I think there's the potential for, if it were to go through, additional bankruptcies and higher unemployment in those sectors. But the positive impact it can make to the poverty levels is just incredible. So it's a difficult thing. And we're even seeing companies individually increasing their minimum wage. And so Target and Amazon are two great examples where their lowest pay wage is $15 per hour. And so some companies kind of taking it upon themselves to recognize they can make an impact and that they're going to do that. All right, well, before we wrap up here, amazingly enough, Cody and I both made it into the office today. We're in separate parts of the office right now, but how much snow did you have to pile or did you have to plow through to make it in?
Oh yeah, it was crazy. Luckily, I did start shoveling out my car last night before it got even worse overnight. But I parked on the side of the street, and I got halfway out, and my car was stuck in the middle of the street, and it took me like an extra 20 minutes last night. Luckily, I did it. There was no cars driving when I was doing it, but it was not fun.
Oh man! So we got almost 30 inches of snow here in Allentown, and I kind of get torn. There's the piece of me that loves it. Like I've had so much fun over the past couple of days outside playing with my kids. My daughter and I made this huge cave tunnel thing, and then we made this sledding kind of slide that and we curved it so that it goes right into the tunnel. It was really neat.
Wow.
So we're really creative in our design last night. But the downside is, oh my gosh, I've done so much shoveling. I'm sore.
Yeah, my shoulders and lower back are definitely feeling it.
Yeah. So, but I'll take it. I love a good snowstorm every now and then.
Yeah.
So we hope everyone has a great week, and we look forward to connecting with you again soon. If you do have any questions on anything we talked about today, or you have any interest in us talking on a particular topic, please feel free to reach out. We would love to hear from you. And until next week, have a good one. Take care.